Welcome back to Stocklabs Market Recaps, the final recap of 2022. We wrapped up December 30th, and we have a New Year's Eve over the weekend. Kind of a do nothing week for the market overall. Kind of thought that it would bounce. Um, After some early weakness, it was weak most of the week. Um, and then actually in the very last hour or two of Friday, there was kind of a ramp that salvaged some of the performance overall. So for the week, we had S&P basically flat, down 15 bips, Dow flat, down 20 bips, Qs down 0.5%. Can kind of call that flat for the vol that's in the Qs. Bonds, bad week, down 2.5%, and IWM eked out a gain of 3 basis points, basically flat for the week. So kind of nothing happened. I mean, I thought that the rally that we saw very late on Friday, I thought that would have started kind of maybe Wednesday, Thursday ish, and pushed for a solidly positive week, but just didn't happen. So more or less a flat week. The leadership stocks were kind of mixed. Facebook and Microsoft were positive. Tesla perfectly flat. And Netflix flat. Google, Amazon, Apple down-ish 1.5%. Nvidia down 4%. Semiconductors, really rough year for them. I mean, with a lot of tech, but the semis have firmed up, broadly speaking, a little bit in recent times, but still just a bad year for them. Breadth for our industries was also kind of mixed. You can see healthcare and tech on a median basis led the week. These were sort of the worst sectors year to date for 2022. So maybe some rotation starting, either short covering in the most oversold stuff or, funds figuring that, they can't have as bad of a year this year as they did, or as bad of a year in 2023 as they did this year in 2022. The rest kind of flattish. Utilities slightly soft, down 0.5%. Services, financials, consumer, basic materials, kind of marginally flat. You can see materials down 0.5%. I mean, this was like the leadership sector. I mean, not at least for the first half of the year was like the real leadership sector, and then I guess kind of held up, but also not really in the second half. I mean, was just a lot of chop in the materials. The commodity space was more or less hammered after the rates topped out, after the long-term bond rates kind of topped out. Subsector wise, not a whole lot to pick from here. Okay, toys and games, drug delivery were up over 5%, but that was it. The rest kind of head towards the unchanged line pretty quick. We did have air services. I guess this isn't directly airlines, but is related to it. I mean, obviously there was a lot of turmoil with the storm the last couple of weeks, and a lot of news about airlines struggling to maintain their services. But whatever, overall, kind of a do nothing week from a breadth perspective as well for industries. On our breadth by market cap, 1 to 5 billion. Up 33 basis points, not too bad. 5 to 10 billion, down 15 basis points. So you see kind of everything chopping around this midline. 10 to 50 billion, down 5 bips. And 50 to 100 billion, down 11. You can kind of see the theme was to just ride into the year with where we were at, and over 100 billion, down 10 bips. So everything was slightly weak it would have been a little bit worse if X that final Friday push, but this is where, you kind of end up, the machines engineered a rally in the final few minutes of 2022 trading. So, intelligence for this week, actually, I'll look at it, but I'm not going to really put a lot of weight in it because a lot of times the themes to start a new year, everything kind of resets from a blank slate. So, okay, we've got SPXL, bullish S&P, bullish oil and gas. This is short treasuries, short the Qs, oil services, energy, real estate, infrastructure. Okay, so based on intelligence, I mean, you can kind of expect sort of I don't know if you have short Qs but bullish S&P, so maybe more choppy than anything if you put some stock into this. But like I said, I'm going to sort of downplay the intelligence for this week. Okay, Labu bearish. ARC bearish, retail bearish, VIX bearish. This is probably some kind of esoteric ETF for medical stuff. Internet bearish, software bearish, social media bearish, BlackRock, something something bearish. Okay, so I'm gonna kind of ignore the intelligence for this week, just broadly speaking, because, like I said, the themes once the calendar rolls over to a new year, I mean, you could see like aggressive rebalances straight into the big losers from this year, which is something that is kind of like it's not accounted for here. It's kind of like a decision that fund managers make just based on you're in a new year, you got to buy back all the stuff you sold for tax loss purposes, in December or whatever. I mean, these are things that, just aren't picked up on like week to week trends, like quantitatively. So, yeah, we'll see. I mean, the year overall, pretty bad for just buy and hold type stuff. There were some great swings back and forth over the course of the year. I mean, it started out at the high, basically straight down for several weeks with a couple small bounces, big summer rally, um, and then a lot of chop in the third and fourth quarters, big down December, and yeah, it's kind of where we ended up. I mean, you're still we're off the lows. I don't know if anyone's convinced that the final lows are in for the bear market. Maybe the market tries to convince us early in the year that the lows are in for sure, but then obviously every time that's happened over the last several months, over the last year, we kind of get the market smacked back down again. So we had several oversold signals. I mean, especially early in the year, oversolds were hitting pretty often, but then you could see like Stocklabs adjusted, and it became harder to get oversold signals, even with a lot of downside action in the market in the second half as well. Overbought signals printed pretty well. They were pretty spot on. We've got, let's see, 6-month overbought on a 1-year back test. Okay, so this was like 85% win rate. 3-month was about, what is this? 65 to 70% win rate. So yeah, solid year for intelligence on the overbought signals. The oversold signals were a lot more mixed. So, it's a bear market. So, even though we hit like some stress points and some lows, a lot of times they meant there was going to be some continuation lower, like over the next week or two, which you can see here. Oversold signal on a 6-month basis was kind of 66%, 66 to 85% that you're going to see continuation to the downside, which, yeah, that bore out a lot of times. So yeah, good year for Stocklabs. There's video up, Fly Quant video. You can watch that one. Looking forward to 2023. I think it should be an exciting year. I mean, probably a lot of people are going to be looking for the bear market to end because they don't typically go, 2 years. Usually, typical bear market is probably something like, between. Actually, I don't know the numbers. I'm going to make something up. Let's say between 9 months and 18 months or something. So you're kind of in that range where people are going to be looking for a big low to get put in. So we'll see what that looks like on the tape week to week, and we'll be recapping it the rest of the way. So hope everyone had a happy new year, and good luck in 2023. We'll talk to you next year. Bye.